Hello and thank you for watching Dukascopy TV. I'm Monica Gibson and joining me down the line is Investec's Victoria Clarke for our weekly wrap-up programme. So Victoria, we've had Chinese manufacturing data which disappointed, a plethora of Eurozone figures, as well as UK GDP which came out on the upside. But which particular events would you pick out as being the main market mover this week?
Well, I think the Chinese manufacturing PMI has been pretty important in shaping sentiment throughout the week, partly because the PMI itself was so soft, but that seemed to trigger and be accompanied by a whole swathe of comments from the various Chinese authorities about whether they would or would not be supporting growth and what their absolute sort of bottom level might be for Chinese growth at the same time. And we saw a bit of a mini stimulus announced in the shape of a VAT cut for small businesses. So all in all, it's been a pretty busy week for Chinese news, and it's giving us a little bit more clarity on perhaps where the bottom line is for Chinese growth, i.e. probably 7%, not lower. But still there's a lot of uncertainty about what exactly the Chinese authorities are going to do from here onwards, and that has fed through to markets through the course of the week, and particularly through the Asian trade that we saw last night.
It is 1 year on from Mario Draghi's infamous whatever it takes statement. Why did this have and continue to have such an important impact? And despite the market's reaction, has the promise actually rang true, would you say? Also, do you believe there is light at the end of the economic tunnel for Europe?
Yeah, well, the comment itself was clearly very well timed. It was a turning point when the euro really was under threat, and some of the more core member states such as Italy were really coming under pressure from the markets, and their peripheral bond yields was struggling. So the timing of that comment from Mario Draghi was very important, and particularly the following up of that with the rescue backstop, the outright monetary transaction scheme which they put into place. And that has carried through, and part of the reason that we still see the euro and peripheral yields remaining relatively contained is because we've still got those backstops in place. Having said that, I think there's still a question about the political will, so moving beyond the ECB's commitment and the importance that has for the stability of the euro area longer term. And I think that's the bigger question, particularly as we get past the German elections in October, at the end of September, and as we move into October, there will be questions about whether countries such as Germany are willing to continue to bail out or look at further restructurings for the like of Greece. So we would actually see a bit more euro downside coming through longer term.
Has this given any impetus to the euro, or are these overarching political pressures the main drivers of the single currency?
It certainly did at the time. At the time, the euro was very much under pressure, and it has acted a little bit as a floor, subject to Euro crisis news coming back and forth. It has helped to provide a little bit of reassurance that there's a backstop in place, but the political will to maintain the euro is equally as important as what the ECB has done, and there the lawmakers really need to step in, and we remain pretty concerned about the situation in Greece, and we do see that blowing up further next year. Hence our view is that euro continues to weaken, and we actually have euro dollar at around 122 at the end of 2014, so quite somewhere lower than its position today.
So next week brings the all-important US NFP figures. There has been so much emphasis on the employment figures with regards to the Fed's suggested September tapering. First of all, do you expect such an early unwinding of QE? And also, are there any other events which our viewers should keep an eye out for?
There's a big difference between tapering QE3, and you can do that at a relatively moderate pace, and terminating purchases altogether, and then at the same point talking about an exit, i.e. unwinding QE3. So our view is, look, we're probably in a reasonable position with the US economy and the jobs outlook to be talking about a tapering in September. That is our central view, but we see the halting of QE3 purchases not happening until the middle of 14, and any actual unwinding is much, much further into the future. So it would be a very gradual and very slow process for the Fed. In terms of what else is important for next week, well, the thing I would point to is the US Q2 GDP figures. They're out midweek on Wednesday, and they will also be important in shaping views about what the Fed is likely to do on its exit strategy. They're currently polled at 1% on an annualised basis for Q2, and that would be a substantial softening from the Q1 figure. And it's possible that we see even some downside to that, and certainly if we do, we could see that September tapering on QE3 push back, and expectations about that broader Fed exit push further into the future also.
Victoria, thank you so much for sharing your insights today. Well, viewers, that's all from me for the moment, but the TV team has plenty more to bring you before the trading week is over, so please do click back to the website. Take care.